Welcome to the Deep Dive. Today, we're putting on our TalkTickers hats to really break down the latest earnings call from Veeva Systems. We're looking at their first quarter fiscal 2026 results.
That's right. And it looked like a pretty strong start to their year. The results actually came in above their own guidance.
Yeah, definitely sounded positive overall. So let's maybe kick things off with just a quick snapshot. What were the headline numbers for Q1?
Sure. So for the first quarter, total revenue came in at $759 million.
Okay.
And their non-GAAP operating margin, which is, a key metric they focus on, was really strong at 46%.
46%, wow. And they also had a pretty big financial target early, didn't they?
They did, yeah. A really significant milestone. They actually achieved their calendar 2025 revenue run rate goal. That's the $3 billion goal already.
Already. Okay, so well ahead of schedule there.
Exactly. Management even described the overall execution this quarter as their best first quarter ever.
High praise.
Yeah.
Okay, so that sets the stage financially. Let's do our deep dive now, get into the details behind these numbers and, the strategic stuff they talked about. How do they talk about the overall health of the business? And what are they seeing, in the broader economy?
Well, they did state that the macro environment feels maybe a bit more uncertain now compared to, say, 90 days ago.
Right, we're hearing that theme a lot lately, but are they actually seeing that uncertainty hit their numbers? Or their pipeline right now?
Not materially was the message. They emphasized they haven't seen a significant change at this time. So the uncertainty is more in conversations, maybe, than in the actual data yet.
Interesting. So it's kind of a watch out item. Where could they feel it if this uncertainty hangs around? Did they mention potential areas of impact?
Yeah, they pointed to a couple of things. Potentially funding issues for smaller biopharma companies. That could delay projects.
Makes sense.
And maybe some conservatism creeping into spending decisions at the larger pharma companies as well.
Okay. And what about the flip side? Are some parts of their business maybe more insulated from these pressures?
Absolutely. They called out areas like Crossix, that's their life sciences, advertising, and data analytics platform.
Right.
That might be less affected. It's got a shorter business cycle, offers a pretty quick ROI, so maybe less likely to get cut in uncertain times.
Okay.
And, fundamentally, the most durable parts are their long-term subscription contracts for their core software. Those are less susceptible to short-term swings.
Compared to what, like services?
Exactly. Compared to business consulting or services which have, quicker project cycles.
Yeah.
And obviously small biotechs are probably the most exposed if the funding environment gets really tight.
So, okay, they acknowledge the uncertainty in the air, but the current guidance doesn't really bake in any slowdown. Is that fair?
That seems to be right. Their guidance assumes things kind of continue as they are now. They stress that customers seem to be navigating things okay, and they aren't seeing any hit to business velocity or deal close rates at the moment. Got it. Okay, let's pivot from the macro stuff to a really key internal project, Vault CRM, and the migration progress. How's it looking?
Yeah, Vault CRM is definitely a huge focus. And they said it's going well. They're now over 80 customers live on the new platform.
80 live now?
Yeah, and they're tracking towards having around 200 live customers about a year from now. So steady progress.
And is that mostly existing customers moving over from the old system, or are they winning new companies directly onto Vault CRM?
It's a mix, actually. In the past quarter, they added 28 total new Vault customers. And it was about half and half, roughly half were migrations from their legacy Veeva CRM, and the other half were net new wins.
Okay. What are customers saying is the big draw? Why make the switch now, or choose Vault CRM if you're new? Is it just, better?
Well, better is part of it, sure. They definitely see it as a more capable product, but there are a few key things they highlighted. One is the embedded AI strategy. That's a big draw, with AI agents expected by year end.
The AI piece. Yeah. And maybe the biggest thing, something that hasn't really been done before in life sciences, is bringing sales, marketing, and medical functions all together into a single database.
Right. Breaking down those silos, what's the real benefit there for the customer?
It's about that unified view, really. Better coordination between commercial teams and medical affairs. It lets them plan engagement more effectively, execute faster across everyone who talks to the customer, and new things built on that, like Service Center and Campaign Manager, are starting to become reasons for customers deciding, okay, now's the time.
Are they hitting any resistance? Any companies saying, nah, we're sticking with what we've got, or going a different route?
They did acknowledge, some companies might prefer a more custom project, maybe build something themselves outside Veeva, but they sounded pretty confident they'll win and keep the vast majority moving to Vault CRM.
And what about the really big players, the top 20 pharma companies? How's the progress there?
For the top 20, they said they're on track, maybe even slightly ahead of where they thought they'd be a couple of years back. 4 of the top 20 have publicly announced they're moving.
Okay.
And 3 of those are expected to actually go live sometime in 2026.
Oh.
They're not pushing hard timelines. Customers move when they're ready. But they do see a sort of red zone, an increased urgency building for those large customers around the 2027 timeframe.
Okay, makes sense. Let's shift over to the commercial business then. That area saw some noticeable acceleration this quarter, right? What was driving that?
Yeah, the commercial side executed really well. It hit its highest growth rate in about 3 years, actually.
Wow.
And that outperformance was predominantly driven by Crossix, specifically the usage-based part of Crossix.
So those investments they've been making in Crossix over the last couple of years are really starting to hit?
Absolutely. Seems like it. They're seeing the results in marketing, optimization, audience solutions. Crossix can be a bit lumpy quarter to quarter because of that usage model, but overall, they see it as a really nice long-term growth business. It grew over 30% year over year this quarter.
30%, okay. What makes Crossix so attractive right now for these companies?
Well, companies are really leaning into getting more value from their digital ad spend. Crossix gives them a fast ROI, it's relatively quick to implement, and it can potentially, double the value they get from digital advertising. It's just a faster path to value than, say, ripping out a huge core system.
And the data behind it, is that a key differentiator?
Oh, for sure. The data network is super comprehensive. It includes retail pharmacy data, specialty drug data, even stuff like meds supplied in hospitals, the specialty script data, and Part B drugs given in clinics. It's especially good for complex therapies. They can project sales data for something like 4,000 brands.
4,000, okay. So Crossix is clearly the star in commercial right now. Are other products helping out too?
Yeah, definitely. Other areas like Data Cloud, Link, and Compass are also contributing. They're just, still in earlier days compared to Crossix in terms of revenue impact.
Gotcha. Okay, moving over to the other side of the house. R&D. How's that engine running?
Still running strong. The R&D business is a consistent growth engine for them. Full year guidance for R&D growth is pegged at 19%.
19%. Solid. Any particular standouts within R&D?
Yeah, ETMF is doing exceptionally well. That's the electronic trial master file product.
Right, for trial documents.
Exactly. They now have 19 of the top 20 pharma companies using it, 19 out of 20. And they see a clear path to getting that last one too.
Wow, near total penetration there.
Pretty much. And that success tells them, okay, we should double down here, invest more to drive efficiency for the whole industry.
Makes sense. What about EDC? That's the electronic data capture part, right? For clicking the actual trial data.
Right. EDC has 9 out of the top 20 using it now. Some of those are still very early deals, multi-year ramps. They see a path to adding more top 20s, but didn't signal anything imminent right now. Management seems really confident it will gain traction over time, though.
And why are they so confident about EDC long term?
It comes down to the structural advantage, they believe. Offering an integrated clinical platform. So instead of separate systems for study operations, data management, site interactions, it's all connected.
One platform.
One platform. That integration streamlines things, reduces errors, and ultimately should help speed up clinical trials. That's the pitch.
Okay. Now, looking beyond the current core business, Veeva AI seems like a massive strategic push. What's the latest there?
Yeah, Veeva AI is clearly a huge initiative. Management sounds very, very bullish on its potential. They think it could boost overall life sciences efficiency by something like 15% over the next 3-5 years. They really see it as a step change.
The 15% is huge, and their approach isn't just building some standalone AI tool, right? It's more integrated.
Exactly. That's key to their strategy. They want to embed AI deeply into their core applications, like an AI agent for med-legal regulatory reviews, or one inside CRM to help field reps with planning and data entry, another for safety to help transcribe safety cases.
So the AI works with the existing software.
Right. They think the real magic, the real gains, happen when AI works hand in hand with those deep industry-specific applications and the data that's already there. They see AI as this new kind of computing non-deterministic that automates human tasks, but it doesn't replace the need for the core apps. It makes them better.
What are customers saying? What's the reaction when they see the demos?
Very positive, apparently.
Yeah.
They talked about demos creating these aha moments. Customers see really tangible use cases like automating engagement plans or taking the pain out of data entry for reps, and it clicks.
Where are they focusing their AI investment first? Which areas?
They highlighted a big focus on the sales side, just because the potential impact on field team productivity is so significant. Customer service, think case intake, and marketing also have examples, but sales seems to be priority number one for getting these embedded AI features out.
And how are they planning to charge for this? Is it included or an add-on?
They plan to charge an appropriate license fee for the AI capabilities. The goal seems to be reasonable pricing to get broad adoption. They expect it to be a net positive for revenue over time, but no specific projections on that just yet. Okay, another big strategic move they discussed, potentially huge, is entering a new market entirely. Beyond life sciences. Tell us about this horizontal market expansion.
Yeah, definitely generated some excitement. They're planning to expand into a new market, starting with something they called horizontal CRM.
Horizontal CRM. So competing outside their traditional life sciences turf.
Yeah.
How are they approaching that? Is it the same team, same model?
No, they were clear it'll be a different team, a different operating model. But they stressed it will still follow their core values: customer success, employee success, speed, focus. They're still figuring out the exact product details and who the target customer segments are.
Any timeline?
They hope to have their first customers by the end of this year. So moving pretty fast.
Wow. Okay. And how do they possibly think they can compete against the giants already in that space? Salesforce, HubSpot.
Good question. They believe they can differentiate through their technology, their business model, and maybe their status as a public benefit corporation. They hinted they're likely targeting larger enterprises, not really the SMB space where HubSpot plays heavily.
Some aiming high.
Seems like it. They sound genuinely excited about the possibilities, seeing a need for innovation out there, and think they can leverage some fundamental tech breakthroughs they've made.
Does this move into horizontal markets change how they think about M&A, about acquisitions?
Potentially. They said they have a wide aperture for M&A now and would look at synergistic opportunities in horizontal applications. That could mean CRM, could mean other areas too. But they emphasize discipline, wanting deals that create real value, pointing to Crossix as the kind of successful complementary acquisition they like.
Okay, let's circle back quickly to that customer unease you mentioned earlier. The stuff they're hearing in conversations but isn't hitting the numbers yet. What specifically are customers worried about?
Yeah, it's apparently a mix of things depending on who you talk to. Some are worried about FDA approval timelines, the Fed update they joked maybe due to vacancies or slowdowns there. Others are thinking about their own acquisition plans and how potential drug pricing changes from, say, executive orders might affect those targets. And then the small biotechs, like we said, are worried about the funding environment, interest rates, that kind of thing. So it's a range of macro and regulatory jitters. Got it. That makes sense. Shifting to margins quickly, that 46% non-GAAP operating margin in Q1 was really strong. What drove that, and why are they guiding lower, closer to 44% for the rest of the year?
Right. So the Q1 strength was partly due to that revenue outperformance, especially the usage-based Crossix revenue hitting hard, and maybe some services timing pulling revenue into Q1.
Okay.
It was also partly just the timing of expenses. Those factors aren't expected to repeat every quarter. So that's why the guidance for the rest of the year settles back towards that 44% range. About 3/4 of the beat in Q1 was actually revenue driven.
Okay, that clarifies things. Finally, they recently had their big commercial summit, met with lots of customers. What were the key takeaways from that event?
Yeah, they shared a few insights. First, just a good overall feeling from customers, which they took as a sign of strong execution by their teams.
Good vibe.
Yeah. Second, apparently a totally different vibe around Vault CRM now compared to maybe a year ago.
Yeah.
Lots of customers live, top 20s moving along. It signals the product is really hitting its stride. Exactly. Third, those Veeva AI demos were consistently creating those aha moments we talked about. Customers saw practical uses, felt relieved. Veeva has a concrete plan there. And fourth, their data cloud is becoming really real for customers. It reinforces that Veeva isn't just CRM anymore. The commercial offering is this whole suite: CRM add-ons, data cloud, Crossix, consulting. Customers are definitely leaning more into digital marketing, data, analytics, getting more systematic.
Okay, so let's try and bring all this together. What does this earnings call really tell you, the listener, about where Veeva Systems stands right now?
Well, I mean, you clearly see a company that's firing on most cylinders in terms of current execution. Hitting that big $3 billion run rate milestone way early is proof of that.
Right. Delivering today.
But they're also very actively planting seeds for future growth. It's not just about today.
Yeah, the core R&D business is still a powerful engine, right? Especially with ETMF basically conquering the top 20 pharma space. That's a strong foundation.
Definitely. And the commercial side is picking up speed, mostly thanks to Crossix, which really highlights how important integrated data and analytics are becoming, especially for making digital marketing actually work in life sciences.
And then you have the big strategic bets, the embedded AI across the board, and this potentially huge move into horizontal CRM. Both are still early, for sure, but they could be major new growth vectors down the line.
Yeah, potential game changers. And while they acknowledge hearing about macro uncertainty, the actual business, the numbers, the pipeline, they seem pretty resilient for now. Partly because of that sticky subscription model, partly because they sell mission-critical stuff to an industry that inherently thinks long-term.
So overall, this call gives you a good look under the hood. You see the momentum in specific products, you see the big strategic plays, and you get a sense of how they're thinking about navigating potential bumps in the road while aiming for those future opportunities.
Exactly. Lots of detail beyond just the headline numbers.
Okay, let's shift gears now. Time for our favorite segment and just the standard reminder. This is absolutely not financial advice. We are firmly putting on our speculative hats here, maybe playing pretend portfolio manager for a second.
Indeed. Strap in for the outrageous but plausible trade idea based purely on the commentary we just discussed.
All right, so given everything we heard about the laser focus on digital marketing effectiveness, the frankly explosive growth of Crossix, and the potential for Veeva AI to really embed itself and optimize workflows within those core apps. Here's the play.
Okay, let's hear it.
You short shares of a major established player in the, let's say, traditional life sciences marketing or data analytics space. Think legacy, maybe someone relying on older data integration methods, more siloed processes.
Go short the incumbent.
Right. At the same time, you go long Veeva Systems shares. Or if you're feeling really speculative, maybe buy some far out of the money call options on Veeva. The bet is on an accelerated pace of Crossix adoption and that Veeva AI integration really taking hold faster than people expect.
Okay, so short legacy, long Veeva calls. What's the specific thesis driving that pair? Why would that work?
The thesis is basically that Veeva's specific approach, AI agents working inside the workflow, leveraging that integrated Crossix data for quick digital spend ROI, creates such a compelling advantage that it forces a market share shift faster than typical slow enterprise software cycles. Those aha moments from the AI demos. The thesis bets, they translate directly into budget shifts because the productivity gains are just too obvious to ignore.
That sounds, well, plausible, like you said. What's the outrageous part then? Where does it stretch credulity?
The outrageous part is betting that big pharma companies known for being cautious, deliberate, sometimes slow to change, will actually rip and replace established systems or shift significant marketing budgets away from traditional partners much faster than they ever have before. It's assuming the competitive pressure from seeing peers get ahead with Veeva's integrated AI and data forces their hand, overcoming that deep-seated organizational inertia almost overnight. It's a bet on disruption speed hitting hyperspeed, basically, fueled by AI and data integration in a way we haven't seen before in this sector.
A bet against pharma inertia. That's bold.
Exactly. Outrageous, but maybe, just maybe, plausible this time.
Food for thought, definitely.
Okay, that pretty much wraps up our deep dive into Veeva Systems' first quarter fiscal 2026 earnings call.
Yeah, we covered a lot. Their strong start financially, the momentum we're seeing in R&D, and especially that accelerating commercial business fueled by Crossix. Plus the updates on Vault CRM migrations and those big strategic plays in Veeva AI and the horizontal market expansion.
We also dug into those nuances around the macro uncertainty they're hearing versus what they're actually seeing in the business right now and why they feel somewhat insulated in the near term.
And hopefully digging into these details gives you, the listener, much better context than just reading the headlines.
Absolutely. So we encourage you to think about what really stood out to you from our discussion. You know, how might this acceleration in digital marketing spend powered by data like Crossix change things? Or what's the real long-term impact if these embedded AI agents truly deliver on that 15% efficiency promise? How could that reshape the way life sciences companies operate over the next few years?
Lots to consider. Thanks for tuning in to this deep dive.